Hey there, everybody. It's Bob, Trade Genius. Got my good friend Phil here. Bitcoin started mooning this week. What does it know? Did we miss the move? Are we chasing? Is it going to dump? Stay tuned. We'll tell you all about it.
Trade Genius.
Hey guys, I'll tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Phil, was it the Bitcoin ETF? Was it sniffing out the yield curve control? Was it just a squeeze? Where are we? What say you?
There's a lot of factors going on right now. I think first and foremost, as typically happens in the leveraged Bitcoin trading world, you're going to get big leverage blowouts. You see them to the downside, you see them to the upside. And we had a big unwind because a lot of people were trading, I think, were positioned for that 32 level to hold as a lower high in the bear market. Well, they went after it and they got it. And it was a big unwind. I think I read somewhere it was like $1 billion in liquidations. But I think the catalyst that was for that was the ETF approval stuff from BlackRock. BlackRock's the one ETF I think that's truly going to matter and what this market is hinging on. I know there's a lot of ETF applications from various institutions, but I think BlackRock is really the one that everyone's focused on. So yesterday, or actually I think the day before, we had a listing or a symbol for the BlackRock ETF showed up on the DTCC site, which is the Depository Trust and Clearing Corporation, which provides the clearing and the settlement, custody, and services for the ETF. So basically on their site, they noticed that the DTCC listing was there under, I think it was IBTC for BlackRock. And so when you get that, and then they also have a QSIP number, which you need when you're creating an ETF. So it looked like BlackRock's getting ready for the ETF launch, right? Those are things that you would expect to see. So that got the big launch. Then at some point yesterday, it disappeared off the DTCC website. And so then we had some instability yesterday based on that. So, whether or not there's games being played, and since then, and I don't have it up here, but they have relisted it. So now it's back on the site. So it's like ETF on, VTF off, ETF back on, right? Well, be that as it may, as far as the ETF goes, we still need to get approval. Gensler came out again today and it was making some negative comments about how crypto's decentralized and it's a problem and there's a lot of scammers in this space. He's basically holding the line as far as his take on, I think, his major complaints about why they haven't approved a spot ETF yet. So it's not like he's alluding to the fact that one's going to get approved anytime soon. The next deadline for this is January for BlackRock. And if it gets extended out, that's probably going to have a negative price reaction. Conversely, it could be approved before then as well. We just don't know. But what we do know is that it's going to allow a lot more funds to flow into Bitcoin. For years, we've been saying it's all about the institutional flows. Well, we're on the cusp of really turning on that spigot, and we're going to get into that in a little bit. For where the price is now, you have to understand that we basically broke through that 32K resistance on the weekly chart, and now we've opened up the range higher. Currently, our new resistance is 35K. So that's our new playground. And it's very important for the bullish case for Bitcoin to hold that 31 to 32K area. In terms of, the ETF, I'll get into that a little bit, and then we'll talk about the technical analysis of the chart itself. When we talk about the ETF, Bob, you're talking about addressing a market that's going to equal about 48.3 trillion. I got this stuff from Galaxy Research. They did a pretty decent write-up on what you could reasonably expect from an ETF. So you got the broker dealers, the banks, registered investment advisors, all of that stuff adds up to almost 50 trillion under management. So you're going to be able to tap into that, most of which is addressable at the moment outside of having an ETF. What you guys have to understand is that these institutions weave in and out in the ETFs. Bob and I see it week in and week out. When they're going into bonds, they're doing 100 million here, 100 million there in various bond ETFs. That is, the ETFs are the vehicle for institutional flows. So it's going to make a big difference. Now, what that means in terms of like longer term flows, it's going to be like this. If you take the current market cap of BTC and you figure the inflows the first year they're estimating, and this is purely extrapolated based on kind of what happened to gold when it got its ETF approval, and using its current market cap versus Bitcoin's market cap, we're getting some of these numbers. And by using a multiplier, so when you get average monthly inflows of 1.2 billion now, that are going to be steady. That's going to be a very realistic, steady amount of inflow for Bitcoin when these ETFs are approved in a normal economy. Now, if we go through a recession, let's say this thing gets approved and we slide into recession, this is probably not going to be the numbers we see, because all flows will be probably more focused into the bond market. But let's just say normal operating circumstances, 1.2 billion a month. The multiplier effect of that on the market cap is about 8.7. So you're increasing the market cap almost 10 billion a month because of that. And what does that mean? Well, you're going to basically see anywhere from 4 to 5 to 6% price appreciation per month with that kind of flow. So that's why this matters. Are people getting ahead of it here? Could be. So the first year they're thinking, again, recessionary environment, 74% increase in 1 year. And I think that's really what this is all about. It's this new inflow of institutional funds. So we'll see. This is kind of a model. This is more art than science, because you just don't know until you start seeing the inflows. But it is based on what happened with gold. And I've always said that I think this is a lot like what gold went through back in 03 and 04 when you first had an Australian ETF, and then the United States came out with the ETF, and it was just a 10-year bull run at that point. So I think it's very similar in that sense, where you're going to have that institutional money come in. And I think it's also going to affect the way that the cycles work. I think you're not going to have those big cycles where you're blowing out to the top side and you get an 80% correction. I think with the institutional flows, that is going to stabilize greatly. I mean, yeah, you'll have your pullbacks. I just don't think you're going to have the big peak in valleys that we're used to, as we've seen in the last couple of cycles. So I think that goes out the door and gets a little more normalized. Bob, before I switch over to the technical analysis, what do you think as far as, because I've just addressed the ETF thing. There's other things like the geopolitical aspect of it. And I was wondering what your take was on that.
Yeah, my only take is I totally agree with you. I think, and I know you're not underestimating it, and you know me of all people, I'm not a Bitcoin to the moon, a cheerleader. But one thing that I've noticed with Bitcoin is because so much of the coins are held off market, that I think that 74% will come like in one fell swoop. I don't think it'll be as flowy, because what I'm looking at is, you're not going to give up your coins to Bitcoin. I mean, to this ETF. So the only way they're going to be able to get to the market caps they want is they're going to have to expand price. And so I think we're going to see once this thing's approved, I think we're going to see a fast expansion of price to that 74% level. What we're talking about, let's say it's going to be around 30K when that thing starts. We'll probably make a new high, Phil. Okay. I think we're going to definitely attack the new high really fast. And then the only other point I make is that, I already have Wolf. I'll start building my position here again in Mara, is that if Bitcoin gets a 74% move, you're looking 6x, move on so you're looking at maybe 150%, 200% move, even more on Mara on this thing. So Mara can go from its $9 to $10. It'll probably be a $30, $30+ stock on that ETF. So you're going to have a couple ways to play it. And the geopolitical side, Phil, I think geopolitics are going to play less of a role than the yield curve control will. So it's going to be really interesting to see how that plays out. And I think BlackRock will drown out Gary Gensler at some point, because the institutional money and their influence in Congress will beat him into submission, because people are going to be begging for non-correlated assets.
Okay. Yeah, I think, the only thing for me in terms of geopolitical would be, right now we're correlating with gold. So you're kind of getting the best of both worlds, because, Bitcoin was risk on when it mattered. And now that equities are having trouble, now it's all of a sudden hopped off that escalator onto the flight of safety gold type play. And so it's kind of interesting now, even that being the case, case, let's just say conflict escalates in the Middle East, then I think gold maintains a bid. And so I think you have to think now Bitcoin will maintain a bid because that's what it's showing us. If we go into a recession and the conflict doesn't really escalate and we don't enter into a wartime economy, for example, and we do go down that recession route, then gold's going to pull back, Bitcoin will pull back. All I'm saying is that you've now broken through a long-term resistance level, 30K, 31K. You have to hold that now. That's very important because if you don't, and Bitcoin's very famous or infamous for doing this, is you create a fake out move. So I wanted to go over to that chart. And I'm going to keep it simple. So we'll start from the top down. This is simply looking at the different timeframes, I should say. This is the yearly look on a daily chart. This is the yearly VWAP ranges. So what we do is we have these bands essentially that are built around the VWAP for the year. And then as the year closes, these levels move forward. And then you also have the year's developing VWAP bands. So if we take a look, we actually have to go back to 2021. Back here, we are getting into the bottom of that VWAP range, which is just basically the one standard deviation around that VWAP, okay, for 2021. And as you can see, even structurally, we're getting into the bottom of this kind of big head and shoulders type pattern, right? So you almost could call that the retest of that neckline from 2021. As we've seen recently in the market in S&P 500, we just did that. We just back tested the head and shoulders that we put in at the top and big nasty rejection out of 4400s, right? That we're still dealing with today. So there is the possibility that this does just come up here, reject off this 35K area, maybe get an interim bounce around this previous area of resistance, which is that 2022 VWAP range, top of that around 31.2. That holds us back test, and then we grind back up in here and we build in this range, similar to when like you build in this range here and pull back and then try to push higher. So we could deal with that. Alternatively, let's say the markets get dicey, everything starts selling off, you lose this level. Now you've opened this all back up. This turns into just basically a head fake, or what some people call a deviation. And then you're going to come clean up 25K, because 25K I think is left something to be desired there. It wasn't like we had a big, like here, right? You come down, you take out that low cleanly and you come back up. That's done. Didn't get that here really. And so I think that level is still suspect, even though we've opened this range up. Now, conversely, if we start busting over this level here, what we're going to probably do, and I have to zoom out of this chart and show you guys the quarterly stuff. So the quarterly, what we'll look for there is above that, we have what we call the 2022 second quarter VWAP range high. And that's going to be 37,500 roughly. And that stems back from this structure back here, where this is where we started to fall out of bed from that yearly head and shoulder pattern. Okay. And that's the top of the range there as far as the VWAP range goes. Why the VWAP range matters? Not sure. Algos like it though. VWAP in and of itself, the VWAP levels are very important for most of the algorithms. So one standard deviation around it is kind of a logical thing, because one standard deviation around things is, the algos sniff that stuff out. So when you're dealing with the yearly and quarterly levels, I think these matter a lot. So I'm going to keep it simple, Bob, on the TA. I just think that that's really what's in play. You're either going to bust through 35K, which is currently our resistance. If you guys look now on the daily stuff, you can see how that, if we zoom in on that, like here's our daily candles. There's a 2021 VWAP range low. Look what we're doing. Wick, wick, wick. So we got sellers up here. This is resistance. They either are going to give up, we're going to get that pullback, or we're going to get acceptance over 35. And then I think we're going to go get that 37. And then we're going to see what happens at 37. As we move up through these levels need to hold as support for higher. It's that simple. So there you go. That's the big picture. I think you're either going to hold up here and hold this range for a while and be range bound up here. But I think the biggest takeaway is if you start losing, I would say anywhere between 31,200 and 31,800 has to hold. If we lose that and we start getting daily closes back under that, then I think we've basically had a big trap up here, and that's going to be a problem for the market. And then I could see that happening if we do go into the recession type environment. Everything's going to pull back, Bob, and I think then you have to start looking for that 25K. And if that plays out to the downside like that, once we take out 25K, you kind of have to stop and say, okay, what's going on with the macro? Where are we with the ETF approval? Did it get approved? Don't remember, just because the ETF gets approved, if we're going into a recession, it doesn't mean those capital flows are going to start. They're probably not going to. They will in 2025, make no mistake. And it is a great thing for that ETF as far as that stuff goes to be introduced and to be approved. But until then, guys, I don't, there's a lot that needs to be said. So I say take it level to level, take it quarter to quarter. We'll have a lot more clarity, I think, by the middle of 2024 as to where we are in terms of a recession and in terms of capital flows and everything like that. So that's, I think you just have to take it like that for now. And then when I think we have the green light, I'll be shouting it from the rooftops, because I think this next bull run is going to make a lot of jaw drops, and it's going to make the stuff we've been through so far child's play. So we got a lot to look forward to, but right now, very choppy, very dicey environment, very volatile. So you just have to take it level to level.
Yeah, and thanks, Phil. And look, if you guys caught that move from 25 to 35, good on you. And I think I'm encouraged because we've been waiting for the catalysts, and they're lining up. Banking, yield curve control, inflation not tamed, political turmoil around the world. It's setting up for these assets. These are safe haven assets. So be encouraged. Look at gold, silver, Bitcoin, energy. Market's been tanking. The commodities are up. So people are starting to get the message. We'll talk to you guys tomorrow. Hit like, subscribe. Check out what we do. We'll help you navigate these markets. Have a great day. Thanks, Phil.
See you later.
Trade Genius.